G'day everyone and welcome to another episode of the Property Trio. We are down to a duo today with Dave gallivanting around New Zealand or some other South Pacific Antipodean adventure. But I've got Cate Bakos. I mean, she's the real money of this show, the real brains.
Good on you. I'm just the one that doesn't do holidays.
That's true. But today we're talking market update, and Dave will be disappointed because he loves the data on these particular ones. But
yeah,
let's get straight into the meat and potatoes of this particular release. For the month, we're talking, we're recording now in April, but we're talking about the March data, and we've got for the month a 0.4% rise. But I mean, that doesn't really tell all the story though, does it?
no, it doesn't. It's been a good month though for capital growth. It's been a positive month. I won't say a crazy strong month. We've really only had one capital city that slipped back into negative territory, and it's Hobart. The interesting thing about Hobart is it's kind of waxed and waned in terms of, what side of the ledger it's sat on with its growth of late. And I put some of that down to just its sheer size. It's a smaller city, and it's also often responding to seasonal kind of cycles as well. But we've had performance. I won't say strong performance, but we've had performance out of both Sydney and Melbourne. Melbourne wasn't number one this month. We were last month. This time round, it was Darwin at 1%, and we've got an ebb coming up on Darwin. There's a lot to be said for Darwin's pivot because it's been negative recently as well. But 1%, it's leading the chart there. The next one is Adelaide, and it's Adelaide that just continues to shine, isn't it, Mike?
Yeah, I mean, if you look at 2024, it was Brisbane, Adelaide and Perth. And if we look at the annual growth rate, I mean, for context, Perth did 19% in 2024. Over the last 12 months, it's down to 11.9. Brisbane dropped right back to 8.6, but Adelaide still at 11%, and it grew a little bit less than Perth. So you would say on balance, it's outperforming Perth at the market. And it does beg the question, we had those three markets galloping away. What is it about Adelaide that's keeping that resilience there?
Yeah, is it a stock shortage? Is it wages and jobs growth? There's a lot to be said for Adelaide, and it's what it's been doing in the last few years, and it's certainly if you visit the city, it's got a fantastic vibe, and there's a lot of money floating around in a lot of areas. You can get yourself some great food and wine and do a lot of fun things in Adelaide, but if you talk to someone who lives there, it's a really competitive market, and they've been dealing with high competition levels at auctions and private sales for a long time now.
And what's kind of interesting to me is that the median value is still quite high. I mean, if you look at the March results, Brisbane, you've got 899, Adelaide, you've got 827, and Perth, 806. Contrast that to Melbourne at 781. I mean, there's not that many times I can remember Adelaide's median being, that close to those other capital cities and that far in advance of Melbourne. So, I mean, it begs the question, is there an affordability part of the Adelaide market? But I'm not really seeing that in the data.
Well, what's really interesting about the data is when you break it down to houses and units, it starts to tell you a little bit of a different story. So if we look at median values for houses, and the order of capital city median house prices is Sydney at 1.473, Brisbane at 991K, Canberra at 969K, and then Melbourne at 929, and then Adelaide at 878. So we've been, very conveniently packaging all of this data up into median dwelling values, overlooking the fact that Melbourne has, an overrepresentation of units compared to a lot of these other cities. And I think it's really important when you are looking at a segmented part of the market, be prepared to segment your data as well.
That's a very, very good point. Now, we talked in previous episodes about mean reversion, this idea that, Melbourne hasn't grown for a while because it's due, right, and kind of challenging that
It hasn't yet, so it must do.
Exactly. And that kind of begs the question about markets like Darwin and Hobart. So say, for example, you mentioned that Hobart was the only capital city market that saw a decline, so it's down just under 0.5% for the month. Darwin leading the charge at 1%. If you look at the CoreLogic data, which shows the past 5 and 10-year growth, it also shares the peak. And Darwin's last peak was May 2014. So if there's a case for anything being due, it's a market that's done 11 years of not much. And Hobart's peak was actually only March 22. So really at the back end of COVID, I think that market really took off just pre-COVID, and then it got a little bit lumpy while COVID was going on, but then continued to soar in the back end. So it really isn't that long ago that the Hobart market did really, really well. But Darwin's a different story. It's been a long time. It is a
different story. Well, let's look at the past 10 years for each of these two cities. Hobart, if you contrast its median value from 10 years ago, it's delivered 86.7% growth, which is pretty phenomenal. In fact, it's in the top 3 there on the entire list, well and truly above Melbourne and Sydney, and only just marginally behind Brisbane and Adelaide. And Perth is sitting at 54.7, coming off a low base and delivering really well over the last few years. Darwin 10 years ago, it's slipped 1% from where it was 10 years ago. Now, I really want to challenge the patience of any investor that believes in mean reversion, because that's a long time to wait.
Yeah, it begs the question, well, Kate, maybe it's just you don't understand mean reversion. It kicks in every 12 years. So, that means it's about to
textbook
start reverting. Yeah. Look, I think where I kind of stand with Darwin is a little bit like Perth. You've got to be prepared for the fact that Perth is a market like Darwin that has had a decade of nothing going on. So you want to be pretty confident in your decision as to jumping in that market, or you've already got a fairly balanced and diversified portfolio and you kind of want to roll the dice. But for the mum and dad investors that are looking at their first investment property, it's a big consideration, right? Because 10 years in the market with negative 1% growth, like that's a portfolio killer.
That's right. And yet people do run out of patience, especially when interest rates go up. You're looking at it saying, well, my out of pocket, so at what stage do I call it a day?
Yeah, and that's the thing now. I think unless we're seeing another 1% or 1.5% interest rate cuts, we're not talking about positively geared assets any point in time, which leads, I think, as a good segue into rents and yields. But before we do that, I did want to ask you about some of the regions, because if we look at the CoreLogic data, they're showcasing some, top performing regions. I know you transact a lot in some of the regions in Victoria. I'm keen to hear your insights and whether there's anything in the data that leads to some opportunities for investors.
Yeah, let's chat about these regions. If I go off that same table that shows, where they've moved over the past 10 years, regional Northern Territory has dipped 7.4%, but really difficult market to try and put specific data points on, because we're talking about a lot of very small regional cities when we consider the size of Darwin as a capital city. Regional Tasmania absolutely almost tops the charts at 95.5, which is greater than any of the capitals, I might add. Regional New South Wales has done 97%, so it's pretty much doubled in 10 years across the regions. Victoria, 72.7, very big contrast to what Melbourne's done. And even when we look at the last 5 years, regional Vic's done 32.3. Regional Queensland, close to 90% in 10 years. South Australia, 68.5. WA, 53.4. So there are some big numbers there. But when we look even more carefully at annualised growth for specific regions, and this was some of the data that was listed in the commentary in the latest CoreLogic report, the Midwest of WA, which includes Geraldton, tops the list for annual growth with a gain of 25.4%. That's huge for anything for 1 year. It's huge. followed by Queensland's Townsville at 23.5. We know that Townsville's gone bang. Gladstone at 22.2. Central Highlands, this is probably the one that bothers me a little bit, at 21.8, and Mackay at 20.2. Now, pivoting back to Central Highlands, we've got a lot of mining towns in there.
Yeah. Some of those, I mean, not all those locations are created equal, right? Like there's a very different prospect in Central Highlands versus Geraldton versus Townsville. If we take Townsville, for example, it's got probably all the recipes that you need to feel confident in a market with a balanced economy, with, I should say, a diversified economy from a job creation point of view. There's lots of investment going in there. It begs the question, what's the peak of that market? I mean, it's done so well in the last little while. But, I mean, it ticks all the boxes that I would say a property investment person would want to be looking for. But places like Geraldton and, you know, some of these Midwest style statistical area threes, there's a big concern about the diversity of employment opportunities and employers and what's actually happening with that local economy, right?
Yes, yeah, very much so.
It reminds me of some of those property magazines where they say, you know, these were the suburbs that got the highest capital growth for a year. And they were always suburbs that you'd never really heard of. And you're like, it did 67% in 12 months. I'm like, wow, like, why haven't we heard about that? And then you actually go through the process of looking at the data and go, well, there's been 3 sales, right? And it's a street of waterfront, and then it's housing commission, and, you know, some owner occ, some investor. The 3 sales happen to be that one street of waterfronts. So, I mean, that kind of explains it away, right?
Yes. You've always got to look at the numbers of data points. It's no good just looking at some headline results. Even if it is median, you only need to pick somewhere small where you've had 3 disproportionately special or expensive or large properties go, and then all of a sudden your median is skewed.
Yeah, so we definitely caution people from just looking at, okay, this area grew the most, then that's where we need to look at. I mean, we know that growth is no guarantee of future growth, but we also know that some of these markets are very, very small. You've got to be careful with the segmentation and the number of transactions and that sort of thing. But I want to ask you the question about regional Victoria and why it's done so much better than Melbourne, because like Melbourne, I think, really started hitting the press when you start knocking back, you know, Commonwealth Games, you start taxing landlords at a 50 grand threshold. Now, that wasn't a City of Melbourne decision. That was a Victorian decision. And, you know, there's a lot of commentary about how those decisions have impacted the Melbourne market. But it seems like the regional market has been a little bit more, I don't know, cauterized from some of this stuff. How do you explain that?
Look, our regions, if we look at the short range data, recent data, they haven't really been flying. And I think all of Victoria has really experienced what I'd call a static and slightly downturned market. I mean, we haven't had colossal price falls month after month. We've had reasonably static values and slight falls, you know, 0.1, 0.2, but it just dragged on. It felt like it went forever when everything else was soaring and Melbourne was just bumbling along with rental growth, but not with any capital growth. The regions didn't do anything outside of that either, Mike. But if we have a look at the last 5 and 10 years, the reasons why our regions are looking so good, it's all due to COVID and the COVID escapades. Right. So our regions absolutely flourished during 21 and 22 and 2020 when everyone wanted a piece of the regions or what do they call it when you get a pass out from the nightclub and you can disappear and you've got the stamp on your hand. You know, people felt like that with their homes. We had a lot of people just closing their doors and going down to the coast, buying stuff on the coast, buying outside of Melbourne because money was so cheap as well. So that was why the regions did so well. And I've been surprised that they haven't come off harder, to be honest, because we've had a lot of people return. But we also saw a lot of people moving to the regions to rent. So it was a horrible time, and I don't like remembering how it was back then, but it certainly explains why the regions have done so well.
But yeah, as you say, it doesn't exactly explain why they haven't come off. But I suppose we are in a little bit of a rental shortage. So that
Yeah.
would mean that those investments that have seen some growth since they purchased are yielding fairly well. So it's maybe a good set and forget investment proposition for some of these owners.
Yeah, I'd say that the Victorian regions did come off, and it was quite noticeable when the interest rates went up because all of a sudden they weren't viable options for everyone to hold. The dedicated investors would hold on to them, but we also saw a lot of holiday house behaviours where people then decided when they had to reconcile their expenses to let go of the holiday house. So you've got to break down your regions to really see which ones were impacted, but certainly the coastal and more expensive markets were.
Yeah, absolutely. Let's go now to rents. And whilst I can't see any particular reason why rents would be moderating in terms of supply, it does sort of seem like that trend has continued. It's a different story between houses and rents, but if we look at probably the big leader for 2024 is really now the leader in declining rents. But
Mm.
put that in context, I'm talking about Perth. It's still at 6% annual change in rents for houses, and I think 8.2 for units. Peaking of well into the double digits.
Yeah, but
What's
it's on the downward slope. That roller coaster looks like, you're heading for the ground there.
mm,
Perth's come off really hard with its rate of rental growth. And the only one that's shown a little bit of an uptick is units in Hobart and Darwin, which again I wouldn't put too much emphasis on because units in our two smallest capital cities, those data points can change a bit. And we do know that there's a lot of investor activity in Darwin as well, and that will be interesting to see what it does to rents in the area
mm.
if we do saturate the city with a significantly larger number of investors. But in general, aside from Adelaide and Perth, we're pretty much, and Hobart for that matter, everything else is back to being within the target inflation band. So that I suggest that rents have really normalised. And there are a few reasons for that, but mostly it's household formation rates and slowdown in new arrivals.
That's a good point. That was one of my 2025 predictions, I think, is that
It
whilst there
was.
was no evidence that rents should be coming down, I can't see them growing at the same rate because household formation rates will change, because I think we were really approaching the ceiling of what people can afford with rents. I mean, rents can't go up indefinitely unless wages are kind of following. So we're changing our behavior. So that kind of makes sense. What was the other point that you made about immigration?
Yeah.
Yeah. And that's where we've had Dutton as recent as this morning I saw on the news talking about capping the international student numbers, and I think migration as well. I think his targets that he's talking about are still well below the long-term average of migration intake. So I think there's a little bit of trickery there in and around the polling booths. But what where do you kind of see the situation that we're in at the moment, where economists are telling us that we're in a per capita recession? So without immigration, we are in a recession. We are going backwards. We've got
Mm.
these housing problems. We've got a rental affordability crisis, which is moderating, of course, but the migrants tend to jump straight into that rental pool. How do policymakers balance that housing supply issue and the economic issue of being sort of a country that requires international migration to continue to grow at the moment?
Yeah, we do need skilled migration. I've got 2 points that I want to make on that question, Mike. The first one is that when economists are looking holistically across everything, they're not as fixated on the housing market as we are. It's just one cog, in this giant machine. And there are other levers that can be pulled, but obviously, housing's a big one. There's no doubt about it. I think it's top of mind right now because we're heading into an election and we've had housing issues at the forefront of every single politician's list of deliverables for quite a while now. The other point that I'll make is when we do have our skilled migrants arrive in the country, they don't just go to one suburb or one city or one segment of a city. And in fact, if you have a really good look at the visas and the control on where people can come in and what segments of the workforce can work in various cities, we've got a lot of regions that are welcoming new skilled migrants. And I think that a lot of people don't talk about that. We just talk about Melbourne and Sydney getting all of these people, but they are more spread around than we might really understand.
And I think that's really good. Although, I suppose if you're moving from another country, it's nice to have a community of your own, and that's more likely to happen in the larger cities. But I mean, if you, for example, are open to the whole country, you're looking here for opportunities. You speak English and you don't mind getting out there. It's great for the country, right? Because if you look at Australia when you turn the lights off. And you look at one of those satellite nighttime images, we're all around the East Coast, and then there's a little bit of Perth. Like it kind of makes you think, well, that is part of the reason why housing is so expensive at a country that's a huge landmass with a very small population internationally speaking. It's because of where and how we choose to live, right?
Yeah, that's exactly right. What's your take on that question?
Well, I think we really, really do require international migration if we don't want our living standards to fall. And it does sort of seem like that's an important tenet. I mean, some of the politicians are saying, well, real living conditions have fallen under this particular government. I think might be a little bit naive to think that we should always be going continually forwards. But if we do need to go forwards, we do need that skilled migration, and we do need to think about the population demands that we require to continue to keep growing like that. I would love to see a lot more policy in and around innovation and productivity. I know the Productivity Commission's recently come out with a big report. I haven't read that one because well, I'm not going to say I have a social life, because that's the joke always goes the other way. I probably just can't bring myself to stomach reading that. But yeah, I mean, we definitely require that extra immigration, but housing just hasn't kept up with it, right? And with the recent budget, we saw some things like apprentices will get a bit of cash along the way. There's incentives to hire tradies. There's a couple of $1 million for innovative construction techniques. But really, I think we've got to look at is the planning issues and the tax imposts on new housing. I mean, getting through the planning phase for a housing development is often cited as one of the most painful and costly parts of the exercise, when you consider the opportunity cost of not being able to do anything while you're waiting for this to happen, and just the amount of tax that goes to creating new property in Australia. I think those are the areas that we really need to focus on to try and get a bit of a balance with. We need this immigration, but we've actually got ways to house these people.
Yeah, I absolutely agree.
That's good. That makes it easier when you do.
It does.
But fun for the listeners when you don't sometimes. And I definitely respect those times where you say, you know what, Mike, you're talking out your hat, because we get to riff on that. So if we look, I mean, we referenced a little earlier about, there's not really positively geared properties. It's funny, like you go through these cycles and you start seeing that advertising, like, we help you find positively geared property. And then 2 years later, you look at the ads and you go like, gosh, like, you mustn't be that clever if you're trying to find it, because I can see like 10 out my window sort of thing. But we are at the point now with, if we continue that moderation in rental growth and, capital growth does hum along, we are decreasing in these yields. With nationally, we're at 3.7%, combined regions at 4.4, combined capitals at 3.5. I mean, at 4.4%, even at an 80% LVR, nothing's really positively geared, is it?
I want to challenge you on that one. And I
Good.
wasn't planning on just challenging you and giving you a hard time straight up. But if we go back to our very first chart that we opened with, and we're talking about Darwin and the Northern Territory, Yeah, you'll get total returns there, towards 10%.
Let's have a look at that data. So we're looking at Darwin at, what does it say, 6.6% yield. So
Yeah.
yeah, I mean, depending on your interest rate, and then you've got all the boring stuff like repairs and maintenance, property management fees, if we're talking about after tax. But I think, yeah, from a gross perspective, Darwin might be the only place where
And regional Northern Territory.
yeah, I mean, I tend not to talk about that and just kind of forget that that exists in the world because, I mean, here we are debating whether Darwin has enough diversification to be a genuine investment hotspot, and then we throw regional NT into the mix. I mean, if we're questioning about Darwin, it makes you wonder about regional NT. What
Yeah,
do
I'm
you
not
think?
talking about risk. I'm just talking about reward. And we
Positive.
know, yeah, I think that anyone who just chases yield without consideration of all of the other important metrics is taking on a huge risk. But if we're circling which areas in Australia right now are delivering positive cash flow, there
Yep.
are a few.
Yep.
And I know that there are parts of WA as well.
Yeah, some regions in WA. So yes, if you are hell bent on positively geared property, you heard it here first. Cate recommends regional Northern Territory
Good on
and
you.
regional WA. That should get your phone ringing a bit
Yeah,
in the
thanks.
next little while. No, I'm here all week. All right, so we are a bit light on with data for this particular month because some of the data houses haven't given us some of the stuff that we like to see, about listings and sales and vacancy rates and those
Got
sorts
a
of
little
things.
bit. Yeah, I've got.
Yeah.
Thanks again to Anne Marie. SQM give us a little bit of data, and what we have is I've got a chart or a table here that tells us about total listings and the annualized change. So Canberra's had the biggest change. They've got 11.4% more listings than they did this time last year. Sydney is up 5.7, Perth is up 5.3, and Hobart is up 4.2. All the
Interesting.
rest of us are down. So Melbourne is down 2.3%, which is enough to maybe move the needle, especially when you've got more buyers and more appetite for investing. Adelaide is short 7.3% on what they had last year. Brisbane 9.8, and drumroll Darwin 28.6.
So is it short 28.6, are you saying?
That's right.
So that market has really, really shrunk. Now,
That's for total listings. Now, overall, nationally, we're down 1.7. So when the year opened, I felt like my own home city had a reasonable number of listings, but it's certainly dried up and it's nothing like what it was last year. We had a lot more. So listing volume, it speaks pretty strongly when you're looking at supply and demand, and it's just one part of it, but it's an interesting one to track, especially when you're starting to see strong price gains.
I'd love to get the segmentation on something like Darwin to see, what the movement is in these, 90-day or older listings. So what do we call an old
Oh,
listings? 120 days or
100,
something?
180 is an old
180.
listing. So let me tell you, old listings for Darwin, they're 39.1% less now than what they were this time last year.
So they are actually shrinking faster than the listing pool.
That's right.
Because I mean, I've read a number of your Sunday blogs, and you refer to some of these old listings as like the ugly duckling style properties that don't really sell in a normal balanced market. They tend to disappear when there's heat within that market. And so with the Darwin listings levels contracting and there being quite a bit of national interest in that market for things like it's due for capital growth, like it's been, what did I say, since 2012 or something. And I've got it here in front of me. I'll tell you exactly. It was 2014. May 2014 was the last peak, and of course, it's leading the charge for yields. There's a lot of eyeballs in that market, and when people are trying to transact and the listings aren't there, then it does broaden the scope to some of these uglier properties. I
Yeah.
remember if we look at, say, Perth last year, those old listings were getting chewed up and spat out. There was obviously so much heat and so much demand. It's
Yeah.
interesting to see that seems to be happening a little bit in Darwin, though maybe it's early days. What do you think?
Yeah, I think we can't steal our thunder for our Darwin app.
Yeah, yeah,
we
true.
we do have a bit of commentary about that, but yes, they're not always ugly ducklings. You know, sometimes they're ugly ducklings, sometimes they're junk. You know, just I know that's very Veronica Morgan saying, but a compromised property that at whatever price it's not a great buy. And then there are the overpriced ones. So an overpriced but good property. If it's a hot market and that vendor is sitting firm going, you know what, I will not sell for anything under 800,000 and everything else is worth 700, but you apply 12% capital growth, all of a sudden some investor is going to say, hang on a sec, this is a good property and it's the same price as everything else.
Yeah.
So yeah, it's junk, it's overpriced, and it's ugly ducklings.
Well, it'll be interesting to see that change. I mean, if Darwin's doing 1% for March and it continues at that pace, you know, then we're looking at a double-digit year for Darwin, and even some commentators that I know won't invest in it because they're worried about the diversification have still sort of flagged it as their number one market for that 12 months. So that'll be an interesting one to watch. When you remember 2024 for Perth, those listings were just shrinking all the time. Total listings, age listings, all those sorts of things. Is there anything that you see in the Perth data that kind of speaks to the fact that the peak of that market, we were saying, you know, October 2024?
I'd say that Perth is showing total listings are now up 5.3, which is not a massive change, but it's enough. And old listings are still significantly under, but you know, a year is a long time. We've only really seen Perth sort of coming off the boil. It's definitely not doing anything horrible, but it's come off the boil only in the last few months. So I think it's really early days yet for Perth.
Yeah. Well, time will tell. So we've got some unemployment data, which was released on the 20th of March, and we're sitting at an unemployment rate of 4%, which is still very, very tight. And I think that speaks to international migration as well, because, you know, from a balanced labour supply point of view, there's an argument to say that is a little bit low. I don't know if we need to spend half an hour on that, but it is probably a good segue into what the RBA are thinking about. And it's been a big kind of week for
Huge
global
week.
markets with this Trump tariff sort of thing. Do you want to give us your 2 cents on the Trump tariff stuff?
Yeah, of course. I thought it would be really helpful. You know, one thing I try really hard to do is stay in my lane. I'm not an economist. Really enjoy listening to and having an opinion on political stuff. But what I thought would be really helpful is just to share some of Governor Bullock's answers to some of the questions that were asked after the announcement last week. And you know, it was interesting timing, of course, that we saw the rates on hold, and then we had Liberation Day.
Yeah.
Not long after, and of course that's thrown a few shockwaves across markets, to say the least. But just to share a couple of questions and answers, which I thought were insightful. She was asked from an ABC News reporter, how's the uncertainty around US tariffs affecting your decisions? And Governor Bullock's response was, at the moment, it's not having a specific impact. Note that this was more than a week ago now. The question we're asking ourselves is what it might do to activity globally and inflation in Australia as we move on. So at the moment, we're not seeing signs that we're being impacted by this. What will be important for us is particularly what happens with our major trading partners and China. And I talked a little bit about the scenarios we've been doing. We've been thinking about what the response of the Chinese authorities might be if they continue to add fiscal support, then it might be that the impact on Australian activity is actually, it will be there, it will be slow, but it might be relatively muted. Two other points I'd make. One is that when you see these things often show up, they often show up in commodity prices, and the exchange rate is a bit of a buffer for us. So when we get sort of hit by lower commodity prices or slowing world economy, the exchange rate helps us to adjust a little bit. The other point I'd make is that I said earlier, the impact on inflation is less certain because on the one hand, if supply dominates, so if the impact of tariffs on supply dominates, then you might see a rise in inflation. But it's also possible that trade diversion might end up with cheaper goods coming into Australia. So there's competing impacts there. They're the sorts of things that the board's thinking about.
Mm.
I thought that was really insightful. She had a lot of specific answers around interest rates, though. I mean, I don't want to just dominate this question, Mike, but I thought they were really good, sound grabs.
No, I'm very grateful for that. I did much less cursory research. In fact, I sent a message on Facebook to an economist mate of ours, Evan, who you know.
Yeah.
And I just said, how do you think this Trump Liberation Day plays out? I see manufacturing in the US struggling with higher costs for materials, especially essentially inflation via the price of goods and global retaliation that could force the US into recession. And I wrote alarmist ? And he said, nope, that's pretty much bang on. So from my perspective, what Trump, I suppose, is trying to do is make America great again, right? Which is, he's had the hat for years. So now it's time to maybe do something about it. I think he's quite aware that it's going to be a short-term inflationary shock, and Goldman Sachs have upped their percentage likelihood of the US entering a recession to 35%. And of course, we saw financial markets take the biggest hit since COVID in 24 hours. The thing about, I suppose, this move is that Trump's wanting to protect their own supply chain and make sure that they're not basically chucking things overseas for the benefits to be reaped by their global competitors rather than themselves. But it's one thing to just say that we're going to put this tariff on and manufacture ourselves, but there's manufacturing of things, and then there's also widgets that go into the manufacturing of things. Like, say, for example, you think about a house in Australia. Well, we have a relatively good domestic timber supply, but as I understand it, more than half of our materials are imported from overseas. So
that's right.
That's I think where maybe some people are getting a little bit lost in this is great for America. I think by putting those tariffs in, they're putting tariffs on widgets. So even domestically produced things are going to be more expensive. But then a lot of the stuff that the Americans are used to buying from overseas will immediately become more expensive. And if things are more expensive, then that's cost inflation,
that fuels
right?
Inflation.
Yeah.
There are a lot of misconceptions and a lot of things outside of the obvious that need to be considered. I mean, for America to tool up and to create all of these factories and plants and production capabilities, that takes time and it takes a lot of money. You can't just say, righto, we're going to manufacture television sets in America now, let's go, because the demand will be greater than the supply for quite some time. And what will that do locally? It's a really interesting thing to study. I think it's frightening, but it's interesting. There's no doubt about it. But if we circle back to what does this mean for Australian property, which is what our show is all about, there are lots of different elements of what's going on right now that will have an impact on Australian property. But let's talk about the one that everyone has been mentioning, and that is interest rates. And to circle back to that, I pulled apart the speech and the answers to the journalist questions because there's so much gold in here. But one of the journos from The Guardian asked, are you essentially saying to Australians that even if we do enter a period of uncertainty, the RBA has the room to cut or to help? Can you explain what you mean by that? And Governor Bullock said, the point that you alluded to, which is that when we went into the pandemic, interest rates were about 1.5%. They're now much higher than that. If it turns out that there's a big growth impact on Australia, we do have the room to move the exchange rate to support there. Now, it does depend on what happens. The exchange rate will also come into play there. It's likely to absorb some of the impact. It also depends on what's happening with inflation as well. And that's a little bit indeterminate. And the challenging bit might be if growth slows but inflation picks up, then we're in a slightly difficult world. But they're the first two parts, I'd say, why we're in a good position. So there's room to move is what she's saying.
Yeah. They've got the flexibility to produce policy responses on either side of the assumptions of what's going to happen, right?
Yeah, that's right.
So what seems most obvious to me is that we get inflation in the US, we get subdued growth in Australia, depending on China's economic stimulatory response to the tariffs, because the US would be a big market for a lot of their kind of state-owned or sponsored businesses like BYD, the car manufacturer that really, I think, probably did a masterstroke of back-ending some of the Tesla production, finding a way into some of the intellectual property and then beating Musk at his own game. It is very interesting that these tariffs do seem to fit right into the sweet spot of people like Musk, who is like Trump's number one supporter and bankroller. There's something to look at there. But I do actually see subdued growth for the Australian economy, which could actually mean, look, if we were due to get 2 interest rate cuts this year, we might see 3, or if we're due to get 3, we might see 4, or a 50 basis pointer rather than a 25 basis pointer. It's all crystal ball stuff, but it does just kind of speak to a reduction in demand, I'm guessing.
And look, we've got consumer confidence to be concerned about. If you're looking at, we've got a very large number of retirees, baby boomers, in society, and they're looking at their bank balances right now. They're looking at their superannuation funds and saying, my goodness, that's a bit different to what it was a month ago. And what do people do when they're feeling the pinch? They stop spending. The discretionary spending slows down as well. Sentiment counts for so much. So I won't be shocked if we have a significant rate cut if things keep tracking the way that they are. But, every day is a new news feed, isn't it?
Absolutely. When it comes to the last GDP print, did you want to cover off anything there?
Oh, I'm going to just give the key stats and get you to go into some of the detail. This is more your wheelhouse. But the Australian economy rose 0.6% in seasonally adjusted chain volume measures. And we're talking about a quarter here. In nominal terms, GDP rose 1.6%. Household saving to income ratio rose to 3.8 from 3.6, which I thought was interesting.
Especially given this data was released on the 5th of March, so it doesn't maybe price in tariffs. Is that fair to say, you reckon?
Yeah, absolutely.
So, yeah, I mean, as you mentioned before, you would see that, you would imagine that that's going to increase the household savings rate. Whenever we get global shocks or we get a decline in sentiment, and I think that's probably the first thing that we will see, right, is a decline in sentiment. And why it's so valuable having access to someone like yourself is that you're at the coalface and you've noticed that since this tariff stuff, since people are looking at the ASX and going, gosh, it's a bloodbath, they're looking at their super balances thinking, oh, I had $5,000 more last month than I do today.
Yeah.
You're noticing people in your neck of the woods that were getting quite enthusiastic with the interest rate cut in the property market are sitting on their hands a little bit. Do you think that's the first sign of sentiment?
You know what's really interesting? When there's a big shock, like the last couple of days, and for our listeners, we usually get our market update out a week after we record it. So only the last couple of days we've seen the ASX tumbling, and all around the world actually we've seen share prices falling. People will be in a bit of a state of shock and they'll just take stock and see what the next few days bring. But typically what happens when share markets get the jitters or underperforming is people switch to bricks and mortar. So I'm half expecting that. The other thing that I'm well and truly aware of is everyone out there who's thinking about investing in property is wanting to get in before the interest rate cuts occur and before the hordes rush in. So I don't think that it's going to be a negative year for Australian property. unless things get really ugly.
Well, time will tell, right? And when it comes to the GDP print, there's probably a lot to talk about that is impacted by the tariffs. Like if we look at one of the main contributors, it's going to be the agriculture and the forestry and those sorts of things. And if you think about Australian agriculture that is purchased by the US, I mean, beef is the famous one that Trump's talked about, like where they're selling us all this beef, but they won't take ours because of biosecurity and things like that. I mean, I feel like we've got enough beef to feed ourselves. I don't know if that's true for the Americans, but grain and those sorts of things. So whatever trade deals Australia has with the US, they were valuable enough to have prime ministers intervene on them. Yeah, we saw Malcolm jump on the phone to Trump to renegotiate the tariffs down to zero the previous time. Albo's been unsuccessful in avoiding that 10% tariff. So that
but Dutton could have done it for sure.
Yeah, well, I think Dutton came out and said that he would have bashed the president over the head, and then Albo sort of said that shows he knows nothing about international diplomacy. So they're having a toys out of the pram fight with each other. But this tariff is headwinds for global trade for agriculture in Australia. But you look at the US dollar exchange rate at the moment. I mean, that's kind of plummeted in the last little while as well. So that could be a balancing thing, but it might be time for Australia and for the rest of the world to reconsider their reliance on the US with these tariffs. And that's where I'm kind of thinking the international retaliatory response will be quite large. And America is a big economy, but when you're talking about going up against China and perhaps the whole European Union in this tariff fight, it could be difficult for the US.
Yeah, it's not sounding rational at this stage, but we are hearing murmurs from Trump that he's willing to talk to people, and I think everyone who's impacted by this is living in hope that they will not necessarily set the tariffs at the same level as what they've been announced at. But time will tell, Mike. Every day has surprised me, to be honest.
Absolutely. And I suppose if we're bookending this episode of the March market update, we are a little bit surprised by a 1% print for Darwin. I suppose we are a little bit surprised by the fact that every market went positive except for Hobart. And surprised to see Perth coming off as quick as it seems to be, and the resilience of places like Adelaide. What else have I missed to wrap up the month that was March 2025?
I think rents have really told a bit of a story, and this close to a federal election as well. That the jungle drums aren't beating as loud. I'm not saying that it's not painful out there for renters, because I know it is, but the data is nowhere near what it was 2 years ago, and I know conditions have eased somewhat as well. So that to me has been a big news story, considering it was number one headline for a long, long time.
Yeah, absolutely. So we'll watch with keen interest in the next couple of months what's been going on. We've got quite a few big grandiose claims that the three of us made for predictions for 2025 that I think are already going off like yesterday's milk. But that'll keep it a bit of fun and a bit of banter and keep us honest. But we will guide you through that every step of the way. And as Cate has mentioned, a little sneak peek behind the curtain, we have a very big Darwin special coming up for you soon. So keep your eyeballs on that. We're looking forward to unpacking that market for you.
Yeah, very much so. It's been fun chatting duo talk with you, Mike. We've missed you, Dave. Hope you're having a great time in New Zealand. We look forward to getting you back in the studio.
Absolutely. Well, until then, we'll see you next week.
See you next week.